This is your LMAX exchange technical update for Monday, February 6, 2017. Euro dollar. So the euro continues to press higher in 2017 within this bull channel, and there is risk now for a break of that critical resistance in the form of the December peak at 108.75. A break above that level would then open the door for an extension towards the 109 to 110 area, at which point the market could then look to stall out in favor of a resumption of the broader downtrend. But again, right now there is risk for additional upside through that December peak and towards the 110 area further up. At this point also, we would need to see a break back below the recent support around 106.20 to take the immediate pressure off the top side. Sterling dollar. So cable has seen a run up in recent trade towards some critical resistance in the form of its December peak at 27.75, but the market has stalled out ahead of that level thus far and hasn't been able to overcome it. This keeps the overall downside pressure intact, and there is risk for a resumption of declines back down towards the recent critical lows in the form of that plus 30-year low that we saw back in October of 2016 at 118.41. At this point, though, we would need to see a close below 124 to strengthen the bearish outlook and intensify declines. Until then, there is still scope potentially for the market to want to retest that 127.75 area. But overall, again, the pressure is on the downside here, and the market would need to establish above, not break, but establish a close above this level to start to get the market thinking about a more significant structural shift. Until then, this structure is bearish and rallies should be sold. Dollar yen. So dollar yen has been showing signs of breaking down after consolidating over the past several days. This breakdown now exposes a measured move downside objective in the 109.50 area. So at this point, we could still see weakness in dollar yen towards the 109.50 area before this market, which is overall quite constructive, looks to put in a meaningful higher low and resumption of the uptrend. Euro Swiss. So Euro Swiss has seen a little bounce over the past few sessions, but overall here the pressure remains on the downside, and the market is looking for a retest and potential break of that 2016 low at 106.24. A break below that level would then expose psychological barriers at 105. We would need to see a break and close back above 106.60 to take the pressure off the downside. Aussie dollar. So Aussie has seen a very impressive run in 2017, but the market could start to find significant medium-term resistance up here into the 78 area, and it is expected that the market should stall out in favor of a bearish resumption or some form of a bearish price action in the sessions ahead. Again, we've seen a very intense move to the top side, but on a medium-term basis, resistance comes in around 78, and the market should be capped out over the coming sessions. Dollar CAD. So dollar CAD has been under pressure, but the market is trying now to see how it will respond around the psychological barrier at 130. While we did see a break below 130 last week, the market has yet to close below 130, and while we hold above 130 on a close basis, we still have a very constructive chart here that could see a higher low and fresh upside back towards that 136 area, those recent multi-day highs. So again, 130 is the key level to watch. If we do see a close below that level, then we'll have to take a look at where we could be going to the downside. It could open the door for some more downside pressure. Next key meaningful medium-term support here comes in the 27.65 area going back to August of 2016. Kiwi dollar. So the New Zealand dollar is also, much like the Australian dollar, enjoyed a very nice run in 2017, but the market is now also, like the Australian dollar, coming to some meaningful medium-term resistance. You can see that in 2016 this market put in a high at 70.46, just shy of that 75 barrier, and since then we've kind of been trading lower. So this move up could be just a move in anticipation of the next lower top below the highs that we saw, if you see, going back to about November of 2016 around 74 in favor of that next downside extension. We would need to see a close back below 72 now to put the pressure back on the downside and confirm this lower top here, or the possibility of the lower top. S&P 500. So the S&P 500 continues to be very pressured to the top side. The market is looking for a fresh record high now, taking out recent highs that we saw just above 23, putting the focus on the next measured move upside extension into the 23.20 to 23.40 area. If we do see any pullbacks, they're going to need to pull back all the way below that support that we saw at the end of 2016 at 22.32 to force a significant structural shift. Until then, any setbacks are viewed as just minor corrections in favor of continued topside pressure. Again, this market continues to trade to record highs, and there is risk for additional record highs over the coming sessions. gold. So gold continues to be very constructive over the past several days and into 2017. This latest pullback that we saw in 2017 was supported in the 1180 area ahead of that next break above what had been some resistance at 1220, and this now opens the next measured move upside extension of $40 to the 1260 area over the coming days. At this point, only back below 1180 would compromise this highly constructive outlook.